Hello, and welcome to the September 2024 Real Estate Market Update brought to you by the Reby Homes team. This month, we're a little bit delayed because we wanted to wait and see what the Fed was going to do with interest rates before we brought you an update. As we mentioned before, the Fed controls interest rates, not mortgage rates. However, we know mortgage rates tend to follow a similar trajectory to interest rates. With the recent cut of 0.5 point and the news of more cuts to come, we can absolutely expect mortgage rates to respond in a similar pattern. Inflation is finally approaching the target rate of 2%, and unemployment is slightly ticking up, although we're still below average. And those two factors are what gave the Fed the confidence to make that cut. But the big question is, can they pull off a soft landing and avoid a recession? Well, that'll depend. And housing is a huge contributing factor to whether or not that'll happen. Most economists are predicting 3 rate cuts by the end of the year and more to come as we enter 2025. And it's believed the next rate cut will come directly following the presidential election. These cuts will certainly impact the 30-year fixed mortgage rate, and Fannie Mae, MBA, and Wells Fargo are all in agreement that they will come down over the next 6 to 18 months. We can expect the ride down to be volatile, with some days and weeks seeing good rates and others not so much. So our advice, if you're in a situation where you have the opportunity to lock in a great rate that you're happy with, do it. Waiting another week or thinking they might come down a little bit more could end up doing more harm than good. As for the current state of the market, as a country, we're heading towards a balanced market. Generally, a balanced market has roughly 5 to 7 months of supply. We've been well under 5 months for a long time, but over the last year, we've watched inventory slowly climb back up, and we expect it to continue to increase as rates come down and sellers begin feeling like they now have a place to go. Many homes have also been sitting on the market longer. When rates went up, demand went down, therefore prices were forced to adjust. Sellers received fewer offers, and oftentimes they were below list price or came with concessions to help buyers curb the high rates. And this simple supply and demand concept is what pushed us towards the now balanced market that we're seeing. Of course, the real estate market is vastly different across different states, cities, and even counties. So depending on where you live, you could be experiencing a very different situation than someone a few cities or states over. But as a whole, the country seems to be inching closer to neutral territory. However, we'll see what kind of impact future rate cuts have on demand. As we know from experience, lower rates equals higher demand, and higher demand equals higher prices and more competition. So buyers, if you are thinking about doing something and have the ability to, take advantage of the next few months before more buyers enter the market. And now for a look at our local market here in the Phoenix metro area. Since September of last year, inventory has increased 63% from just 11,000 active listings to just over 17,000 active listings. Now, don't let that jump up fool you. Not only was it a slow and gradual increase over the past 12 months, at 17,000 active listings, we're still on the low end of historical averages in terms of our local inventory. And believe us when we say it is much needed. Price adjustments were forced into play when demand slipped and sellers were seeing fewer buyers through the door, and that gave us a much needed break from the spiking home prices that were simply unsustainable. 2023 and most of 2024 have seen a fairly slow and quite honestly boring market, which wasn't the worst thing for us. It gave us a little bit of a breather from the frenzy that we saw through the pandemic and allowed our economy to recover a little. With the news of rate cuts, however, we're starting to see the market react. Although interest rates were cut 0.5 point, mortgage rates haven't quite responded yet. Despite that, however, buyer activity has still increased every week for the past month in anticipation of the drop in mortgage rates. Listings under contract have increased roughly 6% since the beginning of August, and it's no surprise that loan officers are seeing an increase in phone calls and mortgage applications as the media circulates the news about dropping rates. As for prices, here's a look at price per square foot over the last 12 months. January of 2023 started off with an average price per square foot of $271. It peaked at $296 a square foot in October, and it ended the year at $286 a square foot. January of this year started at $290 a square foot, peaked in April at $309, came down to $286 in July, and have since ticked back up to $291 this month. So it's been a volatile 9 months with little to no change in rates, but we can expect to see price per square foot continue slowly increasing from here on out as mortgage rates start to come down and buyer activity starts increasing. Historically, pre-pandemic, between 16 and 18% of homes closed over list price, with the average amount being $2,500. During the pandemic, as we remember, that percentage and average amount drastically increased, peaking at a whopping 61% of homes closing above list price with an average amount of $20,000. That number has since come down and we're back to the 16% range, but with an average amount of $5,000 above list price. These numbers are telling as they've remained right around there since August of 2022, so not a lot of movement in either direction, which is pretty on brand with the real estate market over the last 2 years. Slow, but pretty neutral and consistent for the most part. As for the history of seller paid closing costs, also known as seller concessions, the average percentage of homes that closed with seller concessions was between 35 and 40% pre-pandemic, with the average amount being between $4,000 and $5,000. Of course, during the frenzy through the pandemic years, those numbers dropped to a record low of 10%, with the median amount of those 10% being $3,000. Today, we're back up to 52% of homes offering seller concessions at an average amount of $10,000. Finally, rentals. There's a fairly apparent seasonal pattern when it comes to rent prices going back to Q3 of 2021, when the average lease price peaked at $2,095 a month. And since then, we've seen a spike in prices in Q2 each year and a dip in Q4, which has kept rent prices fairly stable year over year, with the average bouncing around $2,000 and $2,200 a month. So if you're wondering what time of the year it's cheapest to rent, it would be Q4 to Q1, likely due to people not wanting to move during the holidays. And that's going to wrap up our September 2024 real estate market update. Thank you so much for watching. As always, please feel free to reach out to us with any questions. We're happy to help. We'll see you next month.